Did we get the Santa Claus rally? No, not really. If you take a look at here's the December 24th, right before, it looked like you were going to get one. You had this kind of pop into Christmas and then faded between Christmas and New Year's, and kind of ended out, mixed. Although, let's be real, 2024, the entire thing was a Santa Claus rally. Like, we had just an exceptional stock market return last year. If you were somebody who just held indices, you did really, really well. Doesn't work out that well every year, but last year was exceptional. 2023 was also pretty good. 2022 was terrible. But again, you don't get good years every year. Will 2025 be a good year? I'll say, generally speaking, I lean towards the direction of yes, I think it's going to be a good year for stocks. I think companies are going to continue to grow. I think the Fed's going to cut rates. I think that the Trump administration will do a lot of pro-business stuff. So I generally do think that the stock market most likely goes higher this year, but I don't necessarily think you're going to get another 25% gain on the year. We've had 2 back-to-back 20+% gains, 2023 and 2024. I don't really think that that's necessarily going to happen in 2025, although it could, right? You can't completely rule it out, but generally speaking, I would say I'm more likely looking for longs this year than shorts, right? We don't have a downtrend. Trend is still very intact for the S&P, for the NASDAQ. Even the Russell, which has recently come under fire, it's still trying to hold this 200-day, 100-day moving average support. So a lot of indices still look good, even the small caps, right? So you take a look at Russell, up 1% today to start the year. NASDAQ up 0.9%. I'm just barely in the red on my position from last few days. It's been a volatile last couple of days of 2024 into this new year. And I still, when it comes to indices, I still really like the NASDAQ longs. In fact, I think we still have, although I'm not sure, do we have a NAS bullish position? NASDAQ is +4. So it was a bullish reading, which is a 5 or greater on the Edge Finder, but now has dropped down to 4. Trend flipped a little bit more bearish here in the recent times, which is understandable. You haven't had the easy kind of uptrend that we've had over here, right? When you have these kinds of moves, the Edge Finder is generally going to give it a very high ranked score in terms of trend. That being said, from a longer term perspective, like a weekly trend, I still think we're very intact. It's just short-term trend looks a little sketchy. So what I'm looking for in the NASDAQ, since I took this trade, several days ago, I'm not looking to move my stops or anything on this one. I'd like to see this 50-day moving average hold. It also coincides nicely with this support level. So I'd like to see this hold and start taking out those highs. If that happens, then excellent. We're going to probably get some nice bullish confirmations on the trend side of the Edge Finder. And what I'll look for in that scenario is to start trailing my stop loss. I'd like to see at least a breakout of this high before I start trailing a stop, if I'm going to get to do that on the NASDAQ. If I don't, right, if we get some selling coming in to start out the year, which is very possible, if that happens, then I'm going to look to go ahead and stop out just below this market structure low here. And if that happens, if we get a bigger sell-off, then it is what it is. I'll look for actually, lower prices. I like that 100 and the 200-day moving average as possible areas to build long positions if this trade does not work out. About 10 seconds after the release, no major moves here. Let's see what unemployment claims came in. Nick, read this to prove you're reading the chat. I am not great at reading the chat because I got a lot of stuff going on at the same time. 211K versus 222K. Okay, so we had a better than expected print for unemployment claims. Now, when I say better than expected, what I mean by that is that a lower number of people filed for unemployment. That's a good thing for the US economy. That shows some strength, and we would take that as dollar bullish. You can see dollar actually moving slightly higher off of that, and indices pretty unchanged from where they were trading before the news. Gold also slightly lower on that. Bitcoin, not really moving. Oil, slightly lower. But again, a pretty strong unemployment claims data point. And again, I actually love to see that. I've for me personally, I'm kind of in the camp of thinking that The stock market continues to do well this year as long as the labor market holds decently and we still see inflation not skyrocket. That's kind of the big picture scenario for me going into this year. So I am more bullish on things like, let me get a different color, stocks, right? And Bitcoin, so long as we see the US economy hold up decently in the jobs market and in inflation. So those two things, by the way, inflation coming down is helpful to gold, but a strong labor market is bearish for gold. So I would say that I am overall bullish on gold, but not nearly as bullish as I was in 2024. In 2024, I was super bullish on gold because what you had in 2024 was the labor market, right? Jobs were actually weakening for a period. And at the same time, inflation was actually coming down. That combination is very, very, very bullish for gold. Right now, we don't really see that. In fact, we kind of see this scenario where jobs look okay, inflation is actually kind of trending up, and that scenario is not nearly as favorable to gold. So what you want to see for gold to look more attractive going into 2025 on a fundamental or a macro perspective is, again, jobs to kind of weaken a little bit, which would cause more rate cuts, and inflation to cool, which would also cause more rate cuts. That scenario is gold's favorite scenario. Weakening economy. This is kind of stagflation, right? That's a scenario that gold absolutely loves.
Trading is hard, but trading by yourself is even harder. This year is your year to join a trading community. The A1 Trading VIP Discord community is made up of thousands of traders around the world committed to helping you learn and to find better trade setups. Inside of the Discord, you can browse Trader Nick, Frank, and Ivan's trades on all things Forex, stocks, options, and ETFs. You also get exclusive access to Ivan's live coaching webinars, where you can learn from a seasoned professional in the industry and even ask questions during the webinar. We also have chat rooms filled with traders who share their thoughts and analysis daily. It's a space for both veteran and new traders alike to come together over their love of markets. Want to take it a step further? Upgrade to Pulver Alerts, where veteran money manager Chris Pulver shares his daily options and stock positions. All things A1 trading are happening in the VIP Discord. Start your new year off on the right foot and join today.
Just see what's going on with institutional money plays right now. So big money is very long gold. This is something I've talked about for a while. Gold and oil, which adds some confluence with my oil idea that I was discussing earlier. For me, I really like to see this. So institutional money proportionally is pretty long: gold, oil, silver, Nikkei, and NASDAQ. They got good sized long positions on all of these things on a proportional basis. On the bearish side, they're bearish things like the Canadian dollar, the Kiwi dollar, the Swiss franc, the Australian dollar, and treasuries. We take a look at the latest move, however, on treasuries. This is interesting. Actually, a decrease in shorts on treasuries and actually increasing longs. So, keep that on your radar. A little bit of a shift there on the bond market side of things. I actually do have a small counter trend trade on TLT, which is a bond ETF. So I am already kind of long bonds, and I've sold puts further out of the money in case prices go lower. I'll build a position on that in 2025 as a bit of a hedge to all of the uncertainty that could come with the Trump administration. And again, that's just uncertainty about any politician coming into power and making changes. The market could get skittish about things, and I like the idea of having a bit of a hedge on. So I've gone for being long TLT. TLT is it's a bond ETF. This thing has gone down quite a bit here. It's been a really struggle bus of a couple years, but I recently started building a bit of a long position in this one as a bit of a hedge or contrarian play. Basically, if rates were to fall in 2025, that could act to really support TLT. TLT is actually up on the day, just shy of 0.9%, 0.94%. Nice little start. We'll see if bonds can catch a little bit of a bid into the new year. Take that with you to metals then. Do you think that means there's like limited upside for things like gold and silver this year, or do you think they could both rally at the same time?
I think they can both rally at the same time. Now, I always take it with a pinch of salt with gold and silver because there's been many times where the dollar's been bullish, but gold just doesn't care really and keeps pushing. So it's more focused in terms of the USD majors where I'm using that dollar focus. But yeah, of course, if dollar is strong, it will be a little bit harder for metals to push further. But I'm still very much a buyer of gold, or wanting to be a buyer of gold and silver, looking at opportunity. I actually missed opportunity this morning on silver, unfortunately. I was snoring at the time, but I do like the longs on gold. So I'm looking for if gold can actually reach this level of support, and I'll look to have a stab at it at the moment. It's looking quite bullish. I'm not too sure if we'll get there, but if we do, I'll be ready and waiting. But yeah, I mean, I'm not the biggest fan of the price action. It is kind of choppy, but I know if I can get a nice trade here, I can get a solid stop loss, and if things go well, it could be a nice trade there. And also looking at silver too, I do like the buys for this one. There was a nice double bottom this morning, and the entry was on this wire candle there, which closed at 2 a.m. my time, so I missed that one. But if it comes back down again, I'll look to see if I can find another entry. But again, with silver, looking at the bullish structure, technicals anyway for me still point to the upside, and I do expect higher prices with these guys in the near future as well. So yeah, I am very bullish USD, but I'm still looking to buy gold and silver until proven otherwise, really.
Yeah, and I mean the thing is, it is possible for them to kind of both go up, and you know, just for the audience that we have here, a lot are fundamentals. So I'll mention this. Part of the reason for that potentially is that the dollar index can just be outpacing its peers, still cutting rates. Like if all the central banks are cutting rates, that's really bullish for gold. The dollar could just be the slowest of the group, but the direction is still central banks cutting rates, and that all kind of favors gold overall. I think that's part of the reason why you've seen the dollar index up like crazy, but gold not completely collapsing, right? If you just truly believed, oh, dollar goes up, gold goes down, if that was all you kind of understood, then you might suggest like, oh, gold should be down at 2,300 an ounce. But again, it kind of matters where all the central banks are, not just the US. And so the US dollar is looking strong because other central banks are cutting rates faster than the dollar right now. So you know, something to add in there. And I think just from a technical perspective, Miko, we talked about this here recently, I think, with gold. It's been very impressive that dollar index rallying so hard has not been able to even really truly, it's suppressed the price of gold, but it hasn't depressed the price of gold. Like we haven't seen this ginormous sell-off in gold, right? I mean, doesn't that from a technical basis just seem like a really impressive holdup from gold?
Yeah, 100%, because you know, USD has been so bullish the past 3-4 months, but gold really hasn't budged in all honesty. So yeah, it does go to show that even though yes, dollar is strong, doesn't necessarily mean that gold has to fall, and there's a lot of things driving the price of gold. So and that's the key thing in terms of the technicals anyway, from my perspective. Yes, we know that there's a correlation there, but at the end of the day, you have to focus on the price action. So yes, USD might be strong, and then you're thinking, let me sell gold. But if the price action doesn't equal a good sell opportunity, then there is no trade there to take. But yeah, it's definitely been something. And I think as well, if USD starts to relax a bit, maybe gold might rip after. It's kind of like holding it back, and then it might fly. But
I was just thinking the same thing. You might even get just like the dollar index, we could see a reversal of roles here where dollar index kind of goes sideways, chills out for a little bit, and gold takes that as a window to really kind of rip through highs. I do think I have a target of 3,000 on gold for the end of 2025. And I got to say,
Nice.
Miko, last year, I mean, I could be dead wrong about that. We'll see. But last year, I was absolutely dead on with the direction of gold, but I was absolutely wrong on the magnitude of gold. I don't know if I've talked to you about this before, but last year, I remember my target well. I had a target for gold by end of year of 2280, which is right here.
Yeah, wow.
That felt at the time, to be honest, it felt like really, really aggressive. Because if we take a look at, we go back to like beginning of 2024, that's like right here. Yeah, right here. I was thinking, okay, we'll hit 2280 by end of year, which was like a gain of like, I don't know, I think it was like 15%. Yeah, somewhere around 15% upside move. And that seemed pretty aggressive. And within a few months, we ripped to that level. But that's where I say I was right about direction, but magnitude, I was way off. The thing just went way further than, and that's pretty typical of crazy trends. Would you agree? Like the big trends, they just surprise everybody.
Yeah, 100%. You can never know where the market is going to get to in turn, which is why it's a lot easier to try and get direction correct. If you get direction correct, then it's like, okay, it's up to the market how correct I am. You know, it might go a little bit in your favor, or it might go a lot in your favor. And that's the beauty of kind of just letting your winners run and seeing how far you can take it. But yeah, I mean, it's always because everyone wants to try and predict, okay, this will get to that price, and this will get to that price. And once you've been trading for a while, you feel like that is just a useless kind of thing to really kind of ride or live by. So you can kind of get direction. Yes, you can have targets. Targets are great. But definitely be open-minded, because number one, you could be wrong in direction. Number two, you might go further, like in your case, or maybe not quite get there. So always take a pinch of salt.
Yeah, and I think that that's just kind of a testament too. I know you and I both kind of employ trailing stops and moving out, or just kind of trying to let wherever that market wants to go, just kind of hold on to it loosely. I think that can really favor years like 2024 for gold, where you just had these like monster uptrends. And if you were able to hold on to a move like that, those were pretty potentially game-changing kind of trades. So, it's something to think about is if you're going to see a huge, resumption of that trend in 2025, I will probably look to do the same thing, where I'm just trailing lightly, not trying to hit, specific targets. Because the second, let's say that you're bullish on gold right now, if you take profits right there and you're truly bullish on it, and then it just does this, right? Like you were super right about directions, like you're saying, but it's so easy to mess it up with hard targets because nobody knows just how far a true strong trend can run. So something to think about. What do you think about? We talked dollar. What do you think about yen pairs? I'm curious your thoughts on the Japanese yen, whether it be against the dollar, the Australian dollar, CAD, whatever you're interested in, the pound, euro. What are you watching on the yen crosses?
So I'm actually looking for some sales. I might have missed the boat, to be honest with them. But I've been looking, because my thinking is basically we've had a massive drop there in July, August, and it looks like that could be the top. Again, looking at the higher time frames, which you mentioned at the start, we've come to some big heights where potentially price can turn around. Again, nothing's guaranteed, but with the price action we're seeing, there's a good chance we could do. So my goal has been to see if I can try and catch those highs and ride it as far as I can take it. I'm looking for euro yen to get back to the high here at 166 and try and see if I can look for some opportunity to take it back down. Pound yen, same thing as well, but they're looking very bearish at the moment. So I don't know if price is going to come back to these levels I'm looking at. You can probably see it better on the daily chart. So I don't know if price can get back to these levels here. It looks like it might tank. So overall, I'm pretty bearish on the yen pairs. It's been bullish over the past maybe 1 or 2 weeks. Dollar yen's the only one I'm not actually bearish on, because we actually have taken out these highs here. So from a technical standpoint, if we keep breaking highs, I can't be bearish, but this is actually a bullish signal for me. So dollar yen's actually the only yen pair where I would actually be up for some longs. I think USD has a lot to say about that. But for like pound yen, CAD yen, yeah, I'm pretty bearish on those ones. But I want price to push a little bit higher so I can get the entries I'm looking for. I was trading CAD yen a few weeks ago. It did get trailed out, but if it comes back to the same area again, more than happy to take some trades and see if we can get it back down to those lows. So yeah, pretty bearish, kind of looking for the continuation of that drop in July and August. Yeah,
no, fair enough. I think yen crosses are, it's interesting you mentioned like the dollar yen holding up really well, just showing how strong the dollar is. But then, as you mentioned, those other currencies, pound, euro, Aussie, everything else kind of losing out to the Japanese yen and to the dollar right now. So really interesting just to see where that is at.
Let's just go through here. We'll go through a start of the year portfolio update. So nothing too exciting really so far. Obviously last year closed out very well. 11% plus months, November, December. This month had a very, very short-term trade, or a very small trade, I should say. This morning for the 0.29% gain is only 7.6 pips, so nothing too big. So that's it. I've also requested a 20k withdrawal from the account. Obviously, it's a public account. It's not my main one. So I'm basically just going to be trading last year's profits on this account going forwards and reinvesting the initial capital into a different thing. I do have an open position here that I can show you. So I'm currently short here on the euro pound. We had a really strong move this morning, actually. Well, when I say really strong, obviously it's relative to time frame in my opinion, but we had a 53 pip move to the upside that I've been shorting. This was initial short position here that you can see that I closed out of. That's this trade I just showed you on my FX book. So closed that one for a very small profit and then be scaling into more shorts up here, looking for essentially just a mean reversion. Nothing too crazy, but the typical DCA trading that I've been showing you guys for the past couple of weeks. So that's it from my part. Bashi, Sean, Kian, good to see you all. Hope you're doing well. Tiger, good to see you. Yeah, I've not seen you guys for a year. We won't do that. It's a very old dad joke. But yeah, in terms of fundamentals, what's going on in the markets, there's not much. And what I mean by that is not that there's not much going on. I mean more in terms of not much has changed. I'm still bullish on the dollar. So anyone that's been watching me for a while on these segments, you will know I've been talking about this 110 level since almost the start of December-ish or mid-December. I was looking for a break of 107 and then a continuation to 110, which we've had or currently having. So that's nice. So dollar target still on there. Still looking for parity on euro dollar. There's again, nothing's changed. Europe is still, not good to put it nicely. So yeah, there's really nothing standing in the way of parity in my opinion. So coming down here, as far as I'm concerned, we might even break lower, retest some of the lows when we broke parity previously down at sort of 0.96. But yeah, other than that, we're chilling. Loke, happy new year to you too. Henry, love from the UK. Can you explain parity? Yeah, of course. So parity is when euro dollar hits 1. So it's never normally a good sign. In fact, I don't think it's just not a good sign if euro dollar does hit parity. So what that means really is $1 is equal to €1. The exchange rate is flat, really. Which if you look previously on this daily time frame doesn't happen often. It's not something that parity is just a normal thing. Parity happens when there's a huge discrepancy between the US and Europe, which there currently is. Germany's data is just really poor. Politically, financially, Germany's not doing hot at all. And obviously with the US, things are going pretty well. We've obviously got Trump coming in soon, I think. I'm not sure when that takeover actually happens. I should probably find that out actually, but even so, I would expect it to continue down, especially if Trump is going to impose some tariffs on Europe. It's going to be a bit messy. Pound yen hit 4-hour, 1-hour demand a little while ago, thinking of buying here. Tiger, I'm going to be honest. I sat down last week and I was looking at my trading from 2024, and my biggest losing asset or biggest losing currency asset, whatever, it was the yen. So I vowed to not trade the yen this year and see how much of a difference it really makes. So yeah, not friends with the yen anymore, but we can have a look here. So what did you say? 4-hour / 1-hour demand zone. Thinking to buy. Let's have a quick look here. I've not really looked into yen. As I said, I've kind of written it off, so I don't really know what's going on. Bank of Japan remains on hold with no immediate rate hikes expected until wage growth trends improve. So you guys might remember I was quite bullish on the yen actually at this, I'd say about the start of December. And that was more looking towards a rate hike in January or this month, which I'm kind of losing hope in. So that's, again, it's kind of flattened my opinion or flattened my bias there. Safe haven demand, but it's not really enough. There's nothing really going on with the yen. For the UK, we've got persistent concerns over UK economic performance post-Brexit. Bank of England cautious dovish pivot adds uncertainty around policy path. Weak consumer spending, data reflects itself in domestic demand. Yeah, there's not much really for the economics that would drive me either way. Although, having said that, overall, I think generally speaking, the pound... Oh, sorry, I'm on pound Swiss, not pound yen. But still, where is pound yen here? But still, I wouldn't imagine much of a situation where we see a huge sell-off here. I think investors really are waiting to see what the Bank of Japan's going to do, and at the moment it seems quite stagnant. So I would be looking more towards going long. Whether here is a good idea or not is the big question. Actually, let me just get rid of all of this. Let's start again. Let's do that. I suppose it's not the worst idea. We've got an oversold RSI down here, nice level of support, bullish moving averages here. So yeah, on a technical basis, it seems okay. But again, from a fundamental view, it doesn't really scream out anything to me. I suppose we've also got this daily 200 moving average here that's quite a nice supportive factor of a bullish trend. Bashi, so we should see a big move from here. I assume you mean euro dollar. Not necessarily. We might just see a slow trickle to the downside in euro dollar. It might be more of a case. Well, when I say a slow trickle down, I don't mean that quite literally. We might see basically a continuation of what we've already seen. So it'd be more a case of we have some small pullbacks, but overall the price just continues to drop down. That's what I would expect. But there is also a situation where we do have some sort of larger pullbacks. If we look here on our daily time frame for mean reversions, we are very, very extended now to the downside, which doesn't mean much in the grand scheme of things. It doesn't mean that price has to come back up, but it's just one of those things to pay attention to. We might see some buying come into the market while it's, again, relatively cheap, just to drive price up a little bit to allow some short positions to go back in. Lee, Happy New Year to you too. Dollar Swiss with unemployment claims today. Yeah, dollar Swiss. I've missed a lot of trades today actually, which isn't a bad thing. I missed euro dollar. We had a really good short opportunity here this morning off the highs up here. Dollar Swiss also has been a great buy recently. Where is dollar Swiss here? Yeah, it's just been a roller coaster. Well, not even a roller coaster because they have dips. This has just been a very, very smooth ride to the upside. So anyone that's managed to catch that has had a very, very nice Christmas. I suppose the big, or not the big, but the main thing I see with dollar Swiss is where price currently is. We've got quite a strong resistance here on the weekly. We're also seeing this weekly 200 moving average currently getting tested. Now, obviously, the fundamentals are still very bullish for this, but we do still need to take into account the technical factors, especially on the weekly time frame, because they can influence what the market does, especially in the short term. So just be cautious of any smaller pullbacks here. Maybe we can get the break and then the retest and the continuation to the upside. Obviously, this is a weekly, really depends on how the economics continue to perform. But yeah, generally speaking, I think it's a good idea to continue up. Just be cautious. For James X followers, James is the daddy. Yeah, that really annoyed someone on Twitter. Sorry, did you say you struggled with euro last year? No, Sean, the yen. The yen was really against, well, no, sorry, the yen wasn't against me, but I was really not doing well with the yen. Luckily, there was no big losses. It was just the worst performer that I had, so I've cut it out now. Unless there is some very clear no-brainer trade that comes up with the yen, whether it, the Bank of Japan does start hiking or something happens, then I'm just going to stay out. Hi James, Happy New Year. Are you just a technical trader or both? I'm currently in a spot where I'm kind of either or. So I'll take fundamentals. I'll take the large picture. I don't really care about day-to-day news, to be honest. So for example, unemployment claims, don't really care what it comes out at. But I will take that and I'll look at it over the past 6 months to a year. I'll look at economies, see how they're doing in the long term. then I'll just take trades based on my overall outlook. So for example, euro dollar here, let me actually put this onto the H1 so I can show you exactly what's going on here. So you can see there's barely any technicals. It's just a Bollinger Band and our RSI. Basically just sell when on pullbacks. There's no technicals going on. There's no trend lines, there's no support resistance, any of that stuff. It is literally just sell pullbacks. And the only reason I do that is because I've got a very strong economic bias to the downside. Whereas if I didn't have the economics, then I wouldn't do it. But technicals are a very, very, very small part. EUR buy. Why would you want to buy the euro? Is my question to you. What's currently attracting you? What's your RSI setup? It's a length of 6, upper limit of 80, lower limit of 20. So it just gives you the extremes of pullbacks. So overbought, oversold situations. I've been so focused on technicals in my career, trying to figure out the best way to pay attention to the fundamentals. Yeah, it's tricky because fundamentals and macroeconomics, it's not a small thing. There's, people do 3, 4, 5 years of education trying to understand and learn economics and all that sort of stuff. So for a retail trader to try and, just learn it is a complicated path to go on. However, it's very worth it in the end. So for anyone that is trying to learn fundamentals, honestly, you don't need to be an expert. You don't need to sit there and figure out every single component and how it all works, because then you just become an analyst. You're not a trader at that point. You are just an analyst. So you got to find that sweet spot where you can say, okay, this has happened, so that means this for the market, so I'll take a trade. And it's very easy to get analysis paralysis with fundamentals. But to be honest, watching this channel is probably the best starting point you can find. Nick and the other guests are very, very good at breaking down what can be sometimes very complex things into very simple terms to help people understand. So just do that. Udemy and those sort of online learning platforms are also pretty good, but again, that's more tailored just to economics. There is rarely any trading involved, so you'd obviously then have to go out and work out how that applies to the markets. Could you please look at WTI? Sure. Euro yen was my worst performer. Yeah, yen in general, euro yen, dollar yen, all pretty poor for me. I had some good trades on them, but over the grand scheme, it's more or less been a loss, to be honest.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.